Good morning and welcome back to Almus Market Mornings. Data is the feedstock for an investor's decision making. It often helps confirm existing biases or views and hence used extensively in projections basis which investors may either calculate the elusive growth rates, discount rates, terminal rates, and whatnot. Currently, investors have been quite starved of this data due to the US government shutdown. While the geopolitical chessboard continues to move, there is no strong data to share on how the US economy is doing at this point. And that's important because while currently investors are largely projecting two more 25 basis point cut in the Fed's meeting this year, things could change, especially if inflation or unemployment data shows something different. JK, good morning. What are we expecting out of today's CPI? Do you think it can be a market mover?
Good morning, Swaraj. So these are ages of disruptions, and US shutdown is one of them, and it can turn out to be a very prolonged one. As for some estimates, it can become the longest one for several years. Like the last longest one was 38 days, and people are expecting it to push into November also. So, as you said, in this situation, we are not getting much official data. Uh, US inflation data tonight is going to be one exception. It's going to be released because that is key to Social Security's annual cost of living adjustment, and will also be a good background for FOMC meeting next week. To set their policy. Otherwise, we are to depend only upon private data. We will have some private data tonight. The Yeah, survey on PMIs, manufacturing and services, flash surveys, and also Michigan final reading. Also, there are some indications from private investment bankers who have independently studied the jobless claims, and they indicate that the jobless claims could have gone up in the latest week. So this is something that limited feed for the market as far as the US economy is concerned. But the shutdown itself is a big thing that you know leads to a lot of conclusions, how the economy could be moving and what could be the impact. Because as I shared earlier, every week US loses about 15 billion in terms of output. And so definitely it is a negative for the economy. Of course, we did have Japanese inflation number today, and the headline number accelerated to 2.9%. The core number also was higher. For what the backup Japan watches, core number which is stripping out the food and energy, that was lower, of course, from 3.3 to 3%, and that is giving some comfort to them. But overall, if you look at it, the headline inflation has been higher than BOJ's target of 2% 41 straight months. And what we have seen is a move in policy rate from minus 0.25 to plus 0.5% in the last several years. So that shows how much non-action the BOJ has been into, how much they have been skeptical about raising rates, so much at stake. They are the largest holders of the government bonds, ETFs, and also the growth of the economy itself has been fragile. And in the meantime, the new government is also looking to spend as much as 91 billion in fresh stimulus. So it's the Japan economy is definitely something quagmire, because it requires a rate hike, but the rate hike is fraught with huge risks as well, and the fiscal position is very bad. And even the political the coalition is not considered to be as stable as earlier. So Japan is one area which the market will keep focusing upon. As I said, in the absence of official data from US, well as the PMS from other regions, it's something to look forward to note there. But while we don't have data, we have some big happenings, like oil price has risen almost 8% in the last 4 days. And yesterday's sanctions by US on the Russian oil majors has been a bigger trigger. And there are also reports that India and China are reducing or maybe suspending the Russian oil import. We also shared yesterday, the apart from the trade deal news between US and India, if India stops buying Russian oil, what impact it could have on, otherwise, is also something that we need to look at, because oil prices already risen. Some of the oil refining majors in India, they are going to be affected, no doubt. The other event that the market is looking forward to is the Trump Xi meeting, which is scheduled for coming Thursday, 30th October, at in South Korea. The focus will be on trade and tariffs, a huge discussion that will be closely watched, and the global supply chains and geopolitics. These are some of the things that will be, on the watch. Meeting is one of the more important diplomatic and economic events also for the whole global markets. Um, what we can see is, if there is a breakthrough deal that could ease tariffs and stabilize supply chains, that could lift the sentiment of the market. There can be a temporary truce, maybe addressing only minimal issues, or there can absolutely be failure or no progress on any of them. That can be a risk of sentiment as well. Official word is not, confirmed that about what are the agenda that is lined up for the their meeting as well. These are the two things that people are looking at. The oil price, it technically it does look like it can go move up to the 72. That is the Brent oil, which is currently at 66, and it's a big move from around 60 that we have seen. Now, more on the trade deal between India and US. A lot of movement seen offshore, in particularly in the stock market, after some media reported. But no, as I said yesterday, there was no official word about it. And in fact, the Commerce Minister has given a statement that the talks are progressing. He is not indicating that there is any specific agreement that is coming forth. He hopes that sides would work towards a fair and equitable agreement in the near future. That's a very vague statement as well. We are in dialogue with USA, and our teams are engaged, and probably work towards an equitable agreement by October, November is what indicated, that too as a first tranche. So it's a big, uh, you can say, quite in contrast to the exuberant news that the market was looking at in the last 2 days. Yesterday, in fact, we had seen the stock market also give up most of the gains. Offshore market started with about 1.5% gain for the Nifty index, and we actually saw it end about 1.5% higher. So that's a big disappointment for the market, of course. But in the meantime, Rupee is quite stable. In fact, Rupee actually started a bit weak, and then during the day it has slightly reversed to the stronger side. Once again, we have seen some offers of dollars from PSU banks at the highs, not allowing it to go above 88, 87.90. And a couple of things notable from the latest RBI bulletin is also that RBI sold about 7.6 billion in August, and also the RER, the real effective exchange rate, which is a guidance for how the rupee is valued vis-a-vis its trading partners, has fallen to 97.6 from 98.8 in August. So this could be, a one trigger for RBI looking to see that the rupee does not weaken further as well. So what the further moves in the rupee definitely will depend upon two major factors: the real development on the US-India trade deal, as well as how the dollar index moves. And in this context, tonight's data on CPI, as well as next week's meeting between President Trump and Xi, and the outcome of it, as well as the geopolitical developments with Russia, will be key to the market, definitely. We are ending the week with somewhat subdued moves in the currencies, definitely. But hopefully next week we'll see larger moves in that. Thank you.
Thank you, JK. And just quickly summarizing, today is the US CPI. That's the data to watch out for. It's being released despite the shutdown because the Social Security cost adjustment happens basis the US CPI. And crucially, it's coming out of Fed's next week's meeting. All eyes over there. Some private data feed from the US is suggesting joblessness may have gone up during this period, during the period of shutdown. And the shutdown itself has been quite prolonged because some say it may lead this period to be even the longest shutdown in the US history. Let's see how that develops. Over the weekend, we have, of course, the Z Trump meeting to look forward to, how those two countries navigate. Uh, China on one hand putting rare earth export curbs, at the same time US trying to arm twist and sort of put aggressive tariffs and also initiated zone curbs for towards China. So it's going all out. But let's see if the tone gets mellowed after both these leaders meet. On the other hand, Japanese inflation accelerated to 2.9%. Core was slightly lower at 3% against 3.3 previously. Um, this number has been consistently higher than the BOJ's target, but BOJ itself has been quite skeptical to raise rates because of the broader implication. Whenever BOJ rates, hikes rates, it has a lot of consequences for the global financial markets as well. Oil prices more recently have risen almost 8% in the last 4 days. Primarily, the move has come from the US sanctions on the major Russian oil companies, and the fact that if India and China would reduce their Russian oil reliance, it would push the two largest oil consumers into the open market, and that would put pressure on the oil prices. So all of this to look forward to. Thanks for listening. We'll catch up next week. Have a very good weekend. Thank you for listening.